Hello friends, welcome back to my channel Technical Analysis Made Simple. In this video, we will discuss about global market chart analysis. Then we will do domestic market chart analysis. Here we will also discuss FII data. Then we will form a view for next week and we will also try to analyze the Nifty heavyweights. After this, we will summarize and come to a viewpoint for the next week. Do watch the video till the end because there are a lot of final points which will help you in the analysis. Now let's start. So if you remember, we were discussing this chart since last week also. We highlighted this area saying that this has now changed into a support. The last week, these five candles, market essentially consolidated in this range and it was not able to cross the high made on Monday itself. Overall, till this support zone is broken, there should not be a concern. And once this breaks, then the next support comes around 30,500. This is a chart of Nasdaq. If you see, we discussed that the target for Nasdaq was 13908. The high made was exactly 13908, and then it started retracing. However, if you see, there are small wicks here, and people are not really willing to sell. Hence, this could be a normal correction and the uptrend can resume from here. Let's discuss gold. So if you see, this range was marked from a very long time. If you see my previous videos, the levels have not changed, they are still the same, and this demand area was marked long back. Now gold has come here, we can see a rejection candle here and a bounce is possible from here. So the reason for decline in gold was due to the increasing bond yield in the US. The 10-year yield has increased and it has surpassed 1.34 now, which is a concern. But we will see the chart and try to find out whether that will continue or that can fizzle out. Now this is the DXY chart, the dollar index. If you see, dollar index is still under pressure. Last week and this week, both the weeks we have negative candles here. Hence, this can again come down to 88 and then we will have to see whether it continues downward or it bounces from there. This is the chart of 10-year bond of US. Now if you see, it is reaching a supply zone here. This was the support area, this was support area that was broken during the crisis, and then now this is basically a retest of that zone. So essentially the first retest is mostly sold off. So according to me, I do not think that the bond yield can cross 1.436 or let's say 1.45 in one go. There has to be a retracement here. After that we will analyze whether it comes down or whether it breaks out. But for now, I think bond yield will decline because bond buying can happen, which will decrease the yield and hence it will be positive for markets and for gold. Now let's discuss the FII data. This was the last Friday data, and after that, if you see, FIIs have continuously bought. The last month total buying was around 9,000 crores. This month they have already bought around 24,000 crores. So there is no point to be bearish here. If you see, they are continuously buying in cash. If they are buying in cash, obviously they are not expecting a crash coming in. Normal corrections are part of the market that you will have to accept. Now let's look at Nifty chart. This is very interesting. Please pay attention. So let's go to the basics and try to analyze this. Nifty is basically moving in this upward rising channel since the March low, and now we have a bearish engulfing pattern here. Bearish engulfing pattern, if you don't know, I will give a quick recap. However, I strongly suggest that please go and check my candlestick series. There I have discussed in very detail. Bearish engulfing is basically a green candle which is surrounded by a red candle and its efficiency increases at the resistance level. Here we are at trendline resistance and a new high which is always a resistance. So basically at resistance we have a bearish engulfing. Now does that mean that market will go down? Not necessarily. But let's see the history first. Bearish engulfing here, correction. Bearish engulfing, correction. Bearish engulfing, fall. Now this fall was for a different reason. This doesn't mean that bearish engulfing led to the fall. And here, if you see, we have a bearish engulfing again. But the interesting point is we have this big candle also, which was formed with a kicker pattern. So here, if anything happens, now the basic is that either this market will break out above or it will break down, right? So this candle high and low are now very important. The low is around 14898 and the high is 15431. If any of them is taken out, then there will be further up move. If the high is taken out, market can advance towards 16,000, which we highlighted in the previous video also. And if it breaks, then market will head towards this level, that is 14,500. It can also remain in a range here. So next week opening is very important. Suppose we open somewhere in between, then it will get stuck here till a breakout comes. So keep this in mind and watch the levels very carefully. As of now, we cannot say any crash or anything is coming. This is just a normal correction. If we see Bank Nifty, so Bank Nifty we had a gravestone dohi here last week. Then there was consolidation. This week we tried to break out and we came back to the same range. Now again this range of the gravestone dohi is prominent and we have to see whether Bank Nifty breaks below or up. If it starts going up, then this rally will continue. If it breaks down, then the next level is this gap filling area where market can come towards 32,680. If that happens, then Nifty will also come towards 14,500. So keep this in mind and use these levels properly. Now let's try to analyze Nifty heavyweights. So this is the chart of Reliance. Last week also we were discussing that it can break out. It did break out. But now bear in mind that always horizontal support and resistance are more important than the sloping ones. So although this trend line is broken, the confirmation will come only and only if this supply zone is crossed. If Reliance manages to cross the supply zone and sustain above that, that will be a clear breakout and then it will head toward 2400 and finally towards 3300. So we need to check out how this works. If you also see the last week whole activity was constricted on the upper part. So there was a consolidation on the upper part of this range which is bullish. Here also if you see the resistance has now turned into support. So Reliance is clearly bullish here until unless there is a big sell off in the next week. HDFC Bank. Now HDFC Bank there are two red candles but volume is missing and hence we can always consider it to come here around 1500 and then take a support and advance further. So this is also in a correction phase. Infosys is a little weak. This line was drawn last week itself and we were discussing that how 1324 can act as a resistance. So this week Infosys tried to make a high of around 1328 but it did not sustain and it was sold off. Now this channel is very important. If this channel breaks, then the next level that Infosys can test is around 1200. If this level is broken, then the rally will continue towards the upper trend line of this channel. Overall, Infosys is a little weaker as compared to others. And Nasdaq is also weaker. So we can say that tech is yet to resume its rally and it is going through a consolidation phase. HDFC had given a good breakout last week, but then that breakout did not sustain and it came back. So now the important thing is, if you see, it is in the same range as it was before and it is near this high as well. So we need to watch out for the level of 2710 and 2780. If any of these two levels are broken, then the movement will be on that side. If 2710 is broken, then the next level that comes is around this, that is 2600. As of now, it does not look very concerning because this candle has decent volume, and after this sell off there was a halt. So we need to see that whether this will result in a reversal or whether it continues the down move. Now let's summarize. So markets are in correction phase, nothing to worry as of now. Global indices are in sideways momentum. They are moving in a sideways manner and there is not a clear picture as to where the markets want to go. So next week will be very crucial to form a concrete view of where the market is headed. As of now, the best way to look around is probably if you are ETF investor, try to accumulate ETFs at the major levels of Nifty like 15,000, 14,700 and 14,500. And if you have good profits in any of the stocks and you feel that you should book partially, then keep booking your profits because markets are dynamic, we need to adjust with them. Do not do fresh buying as of now until unless we get a clear indication that the rally is resuming or a bottom is formed. That's all for this video, friends. Please like and share the video. Thank you so much.